So I am here to answer the question, why did I choose a 1099 job over a W-2? What's up, y'all? My name is Cody. I am an emergency medicine doctor. Welcome back to my channel. So one of my more recent videos, I talked a little bit about locum tenens, and in a section of that video, I mentioned creating your own business. So today I want to talk about why I chose to go the 1099 route and create and form my own business versus becoming a W-2 employee. But before we go any further, if you haven't done so already, make sure you hit that subscribe button. Give this video a like, it really helps me out. But yeah, so in this video, I am going to talk about some of the pros and cons of 1099. I'm going to break down why I chose not to go with the W-2 route. And hopefully, if you are in between considering 1099 or W-2, this gives you a little bit of insight. Now, by all means, I am not a financial advisor. I am not an accountant. I'm just speaking for myself and just giving you some of my thoughts into why I chose the route I did. So W-2 or 1099? Let's talk about it. So just to give you a little background, I am an emergency medicine doctor, right? So typically, if you specialize in emergency medicine, you're going to work in an ER. Now, sure, you can do urgent cares. You can open up your own urgent care, what have you. Typically, as an emergency medicine doctor, if you want to work in the emergency room, you're probably not going to start your own ER because it's super expensive. You're most likely going to work for a hospital or a hospital system or a medical group. Now, most of the time, if you're working in a hospital system, you're going to be offered a W-2. Now, with the W-2, you're going to have a few things to consider. For one, taxes are going to be automatically pulled out. For one, most of the time when you enroll, all of the taxes are going to be already pulled out for you, all associated fees as well. This includes federal income tax, state income tax if you're somewhere that has it, Social Security. Now, in some cases, you may get a list of benefits that you have that you don't necessarily have to pay for. I know for me as a resident, when I was W-2, I had health insurance that I did not have to pay for. I had a substantial decrease on a monthly premium for dental and vision insurance. I had a retirement account set up, small amount of disability insurance as well. And not gonna lie, as a resident, it was super clutch to just not have to worry about, oh, I have to, figure out this health insurance policy and that health insurance policy. Oh, I have to worry about, taxing and taxes. No, it was automatically done for me. On the other hand, for a 1099, all of the income that you will be making typically goes to you. For example, if I'm making $100,000 under a W-2 and they take up, let's say 30% of my taxes away from me, I'll be walking away with $70,000. Other hand, for 1099, if you make 100, you're going to get 100. But with that 100, if you are creative, you can save substantial amount of taxes, meaning that instead of potentially paying 30% of taxes, you may be able to decrease that amount significantly depending on your business structure. So overall, potentially you can be saving more on taxes than you would as a W-2. Now, there are plenty of videos out there by accountants and financial advisors who kind of explain, the ins and outs of a 1099 and a W-2. But for the sake of this video, I'm just going to explain essentially what I did. So the first thing that I did after starting my job as an attending under a 1099 contract was hire a CPA. Okay, they walked me through all the ins, outs, the ups and downs on tax saving and tax planning. The next thing that I did was form an LLC. Now with this LLC, I am the owner and operator, but also the employee. And we'll kind of touch on that in a second. But essentially, I am my own business. I provide medical care to hospital systems for a negotiated rate. I also make content, whether that be in the form of continuing medical education or vlogging and sharing information, and I also do some other things as well. And since I am the sole owner / employee, all of my profits come to me. And so because I am a high income earner, for me, it only made sense to file under S Corp status. And I won't touch too much on S Corp status. I definitely recommend kind of just doing a deep dive on YouTube to kind of go over that a little bit more. S Corp status for me means being a little bit more flexible when it comes to tax planning, tax savings, and business expenses. So let me break it down a little bit. So I got my LLC, I got my EIN number, and now I will be filing under S Corp status. In order to do so, I had to make sure my business structure was just solid. So working with my CPA firm, we set up my QuickBooks, my payroll. We set up a business account as well. So now what happens, all of my earnings that I get from my business go into my business account, and I pay myself what is called a reasonable salary. So let's say I make $500,000. I don't pay myself $500,000. A reasonable salary for an ER doctor is anywhere between, let's say, $200,000 and $250,000. So let's say I break that down monthly and say, okay, let's do $240,000. That's $20,000 a month. Easy math. And so now instead of taxing that $500,000 per year that you would potentially be making, you're only taxing $240,000. And so now you say, okay, what happens to the other half? Now you start getting into, okay, what is a business expense? Now, business expenses can be totally written off. So some business expenses for me would include, for example, health insurance costs, medical equipment, licensing fees. If I'm at work and I order DoorDash for lunch, that is a business expense. If I'm going on a trip somewhere and I am working, whether that be practicing in the ER or filming content, a large portion of that trip can be written off as a business expense. And then there are so many other different avenues and ways that you can kind of calculate things that you use from your everyday life as a business expense. Then you say, okay, so I know you're not spending $260,000 on business expenses, so what about the other half? So at the end, that whatever is left in the business account can then be distributed among my employees. So since I am the owner and the only employee, the rest of the money can be distributed under me and be taxed at a lower rate. So all in all, it just made sense for me to work as a 1099, formulate an LLC, and file under S Corp status. I hope this video helps. Again, I am not a financial advisor. I am not a CPA. I'm just saying what I did. If you found this video helpful, drop it down below in the comments. If you want me to delve on some more specific topics, also drop it down below. Otherwise, see you on the next video.